Well, it's maybe good news if you've got a lot of money in a money market account at the bank because,
Hey everybody, Jason Barlow is Sell for 1%, joined by my dad, Dave Barlow, and Rich Sircone with Equitable Mortgage. Rich has a market in 2 minutes for us. Rich, it's all good news, I'm sure. Please take it away.
well, it's maybe good news if you've got a lot of money in a money market account at the bank because it looks like it's going to continue to earn more interest because if you're trying to get a mortgage, interest rates are going to remain high, it looks like. We had a number yesterday. This is April the 11th. On April the 10th, we had a number of consumer price index, which was much hotter than expected. It indicates that prices are continuing to rise. Inflation is continuing to be a problem. And as long as that is the case, the Federal Reserve is not going to be motivated to lower rates whatsoever. And so the future guidance on rate decreases, whereas in December they thought 3 rate decreases, one starting by March, that's completely off the table. Now they're talking about maybe 2, maybe 1, maybe none, maybe they're going to raise rates. So the mortgage market always being a forward-looking indication, they're always looking at what the Fed may do next. They have reacted very aggressively to this, and rates are solidly in the 7% range now. And again, depending on your circumstance, anywhere from 7.1 to 7.5 or more, if your loan to value and your credit scores are in a certain factor. First-time home buyers with smaller loans under 200,000 probably still can put a 6 in front of that because of special programs that we have. But in general, most of the folks are going to be paying over 7% right now.
So in comparison to a month ago, 2 months ago, I mean, they seem like they peaked again last November. So what was that, 5 months ago? They got up above 8%. They kind of drifted down. What was the low that we saw here recently? 6.25, 6.5?
Yeah, so what happened in December, you're right, it did peak in November. In December, the Federal Reserve had their December meeting, and Jerome Powell came out of that casting a lot of doubt on the economy, on the strength of the economy, and putting forth the notion that inflation was on the ebb, and we were going to start to see a less robust economy going forward in 2024. And he seemed to telegraph 3 rate decreases. However, at that point, immediately the market started to recover. You're right, Dave. At some point, we were at 6 3/8, 6.5 on an average type of a rate. And slowly we've drifted up as the numbers just haven't borne out the idea that we're going to see rate decreases here in 2024.
So I think I'm going to lose a dollar bet because I said by the time we get to May, we should see rates in the 5s. And I don't think we're going to get there.
Yeah, it doesn't look that way.
Yeah, CPI inflation's closer to 5% than it is 2%. Right. So they can't cut right now. Well, and I saw an interesting article on the financial news that it's the first time I've seen this, that they're saying the big problem isn't necessarily, it's inflation, but inflation's being caused by the overspending by the government and the money that they're printing. And like I said, it's the first time I've heard anybody come out and say that. It's typically been this problem, that problem, everybody else's problem. And I know that Congress right now has got a lot of pressure on them to stop spending like a bunch of drunken sailors and to start to rein in the spending. And so we'll see what happens there. But I thought it was interesting that That's the first time I've seen anybody of any consequence in the financial world kind of point a finger at Congress.
When I started in the mortgage business back in the 90s, an older guy said to me, if you want to know what rates are doing when you're out driving around in your car, look at the gasoline prices.
Yep.
If gasoline prices are elevated, interest rates are probably elevated. When you see gas prices going down, typically you're going to see interest rates go down. It's a pretty good barometer for people that want to know, hey, what are rates doing? Just look at the sign in front of the marathon station, and you'll have a pretty good idea of what rates are doing at any given time.
Well, the other part of that article was also that same exact point, Rich, is that the problem that they're going to have now is that gas prices, are going to remain, above $3 a gallon. I have to put high test in my car, so I'm up closer to $4. But even if Jerome Powell was to come out and cut rates next week, that's not going to lower the price of gas. That's not going to lower the price of bread. That's not going to lower the price of, milk. Everything is up, and it's going to stay there for a long time because of the lingering effects of these, inflationary numbers that we're seeing. And so, yeah, I agree with that 100%.
Yeah. There's a lot of political and governmental reasons why we are where we are, and that's another video that I'm sure Jason could definitely give us a lot of insight into.
There you go. All right, Jay. Any last thoughts?
No, we'll watch what happens. I mean, the other end of everything is, elections are coming, and so if they were to slash rates, like I said, inflation you would think would rage and prices would go up. So that's not going to happen right now. There, it's going to be very interesting to watch how this all works together. So we'll see. Stay tuned.
All right. Well, thank you very much, guys, for the discussion here this morning. If you like this information and want to get updated once a week with this stuff, like and subscribe, hit that notification bell, and you'll get notified as soon as we post new information each week from the guys here at Sell for 1%. If you have any questions, feel free to give us a call. And if you're in need of a loan to buy a home, you'll want to talk to Rich Saccone with Equitable Finance. His contact information is right here on the screen. Rich, thanks for the update, and we're looking for better news next week.
Let's hope for better news on the interest rate.